Welcome to ForexTV.com. It's Thursday, February 14th. I'm Remy Hokie for your New York Forex Market Buzz. In afternoon trade as of 1 p.m. Eastern Time, Euro dollar is at 1.4630. Sterling dollar trades at 1.9694, while dollar yen is around 107.97. On Capitol Hill today, Bernanke and Paulson testify before the Senate Banking Committee this morning. And taking a look at today's U.S. data releases, the trade deficit narrowed significantly in December to $58.8 billion. The weaker U.S. currency as well as rising exports offset the gap between China. Meanwhile, initial jobless claims fell 9,000 to 348,000 in the latest week. But the 4-week moving average climbed to its highest level since October of 2005. Joining me this afternoon is Mark Chandler, Global Head of Currency Strategy at Brown Brothers Harriman. Good afternoon, Mark.
Hey, it's a pleasure to be here.
Thank you very much for joining us. Well, Bernanke's bearish outlook on the U.S. economy pushed U.S. equities lower later in the morning session, and Bernanke did highlight downside risks to housing, employment, and credit. But Mark, the dollar has pulled back after topping 108.60 versus the yen earlier. So if you could tell us about the broad-based selling we're seeing in dollar yen and the yen crosses.
Sure, I can tell you this, that I'm not sure that's really triggered on Bernanke's comments. Bernanke did highlight the downside risk to the economy, but this is clearly a standard Federal Reserve position. We've seen it from other Federal Reserve officials in the recent couple of weeks. I'd say that, if anything, the Fed funds futures are implying slightly higher rates now than they were before Bernanke and Treasury Secretary Paulson spoke. Dollar yen did get above the 108 level yesterday, and we stayed above there in Europe and Asia and Europe earlier today. However, with the broad-based dollar selling we're seeing today, dollar yen has pushed back below the 108 level, and I think that it has just as much to do with people feeling uncomfortable with the dollar above 108, given that the 108.60, which we tested this morning, 108.62 actually was the high, it represents a very important retracement at technical level. And it seemed that the talk in the market was that Japanese exporters were happy to sell their dollars up there. On the downside, I think that there's potential for a bit more room for dollar yen to go back down to 107.50 to 60 area. But as well on the crosses, the yen has strengthened, but very little, given that the stock market is down. As we're talking now, the stock market's down about 140 points on the Dow and about 1% on the S&Ps. And the yen is very little change on the crosses, like euro yen is off marginally, sterling yen's off marginally as well. What I'm saying then is that the yen strength is not nearly as much as one would expect the weakness of the stock markets.
Okay, Mark, thanks for clarifying that. And also, since you did mention dollar weakness, let's take a look at euro dollar. Despite the aggressive rate cuts from the Fed and expectations for more rate cuts coming ahead, it will take a while for the cuts to take effect in the economy. And also, the economic stimulus package that was signed yesterday will help to contribute to growth later in 2008. But both near-term and long-term, what is your forecast for euro dollar?
I think that in the big picture of things, we think that the multi-year downtrend in the dollar, there's a whole host of currencies, is nearing an end. The dollar, we suspect, has already bottomed out against the British pound and the Canadian dollar. Against the euro and Swiss franc, though, it seems like it's going to take a little bit more work for the dollar to carve out a convincing bottom. In particular, today, sort of in contrast to Bernanke, who seemed to keep the door open for a 50 basis point cut next month, that the ECB member and Bundesbank President Weber was again talking very hawkishly, saying that the market is underestimating the ECB's inflationary resolve. So currently, the euro is trading 146.35 or so, and we have what I've been looking at since Monday is for a move to 146.60, which is important. Moving averages and retracement levels come up near there. I think that ahead of the weekend we'll probably see that, but I'm not so sure that we've done anything significant to the charts in the sense that since probably late October, the euro has been trading in a roughly a 143 to a roughly 149 trading range. And earlier, end of last week, we tested the lower end of that range, And then as more participants came in, especially with the end of the Chinese New Year celebrations, more of the Asian sovereign wealth funds and sovereign central banks returned to the markets. And there's a lot of talk in the markets that they came back and saw the cheapness of the euro and began buying the euro. And since then, of course, for the last 5 days now, actually, the euro has been putting in higher lows, which is one definition of a uptrend. So on the upside then, 146.60. On the downside, near term, 145.50 or so. Over the longer term, we look for the dollar to finish this year higher than it's currently trading. We have the euro finishing the year below 140.
Okay, Mark, last but not least, before we wrap it up for today's interview, if we could take a look at Australia and also the dollar block currencies. Overnight, Australia's employment data came in firm, and the RBA does remain hawkish. So if you could give us your take on the commodity currencies and what pairs you see as a good opportunity right now.
Sure, I'd say you're right that the Australia and New Zealand, for that matter, have generally reporting much stronger economic data than the market had expected. You mentioned the Australian employment data. That's part of the story, for sure. And we think that the RBA looks like they're going to probably have to hike rates at least one more time. And part of the market, part of the derivatives market, is pricing in even another hike after that. However, the Australian dollar finds it tough to get much above 91 cents. And on the downside, it's about 89.5 cents should be some support. That's what we're bouncing off of today in response to those strong employment data. I wonder, though, how much we should think about these countries as commodity currencies per se, since obviously they do more than just produce commodities, and they have other characteristics. One of those characteristics, besides producing commodities, is relatively high yields. Both in New Zealand and Australia are among the highest interest rates among the advanced industrialized countries. And I think that at some times, those high interest rates give those currencies extra support as well. The Canadian dollar, unfortunately, though, is not really participating with this broad-based move against the U.S. dollar today, or the gains made by the other dollar block currencies like the Australian and New Zealand dollars. Canada suffers from, reported today, a smaller than expected trade surplus. And also the Bank of Canada is thought to be one of the central banks most closely tied to the U.S. in terms of easing policy. So far, since December, they've cut rates twice, and we expect another rate cut next month.
Okay, Mark, as always, thank you very much for insight and analysis into the Forex marketplace.
Thank you.
This has been your Forex Market Buzz with Mark Chandler, Global Head of Currency Strategy at Brown Brothers Harriman. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.